Is the sell-off over, and is the Santa Claus rally still on deck? That's coming up next. In this past weekend's newsletter on the website now, realinvestmentadvice.com, we discussed the fact the market is now getting fairly oversold on multiple levels. In fact, with the MACD sell signal still in place at this point, there's still downside risk to the markets in the short term. However, as we're looking at these signals, the market is in a very defined downtrend right now with support holding at the 50-day moving average, and it held that on Friday. Looks to hold that again this morning as the markets are set to open a little bit stronger this morning. Again, we are seeing a rotational shift right now in the markets from the Momo stocks, of course, the Nvidias, the AMDs, etc., into more value-oriented stocks. Again, this is kind of a risk-off rotation in the markets. It's also very much part of what you would expect to see when mutual funds are making their capital gains distributions for the years. Now, we talked about this previously in the newsletter, saying the first couple of weeks of December typically have some weakness because of mutual fund distribution. So what's going on here? Of course, mutual funds are selling those high flyer stocks because they've got big gains in them, and they've got to raise some cash in order to make those capital gains distributions for the year. So they're selling those stocks, bringing those portfolio weights back down to normal, and then buying into some of the value stocks that are underweighted the portfolio because they need to get that cash back to work. So that's why you're seeing this rotational shift in the markets. We've got about another week or so of this to go. But again, as long as we remain within this downtrend, there is some risk to portfolios in the short term. Now, importantly, our sell signals are still in place here. We're getting fairly oversold. Now, the last time that we had sell signals come off such an elevated level was back in March, April of this year as we were going through the tech route that we saw back then. Of course, this was when ARK was getting under a lot of pressure at that point. We saw a lot of those Momos. A lot of people were saying back then that the tech was going to get smashed, and this was all about a value rotation that lasted for about 3 days, and then the markets took off on an advance with technology leading the way. We saw the same type of setup back in September, of course, with markets registering sell signals. Markets then sold off through the month of September. Again, technology stocks under pressure. People starting to make expectations that that was the end of the trade. Turned out not to be the case. Again, markets rally back here again. So again, this has been a common theme through this entire year. Tech gets under pressure because it's so overbought and extended. And of course, a lot of these stocks, a lot of these meme stocks, the most shorted stocks, those that the retail traders are chasing, those are the ones that get hurt the most. And of course, that's where people's expectations change. And then you get the rally coming back. Suspect the same thing to happen here as we move into the end of the year. First part of next year, a lot of these mutual fund managers, they don't want to be out of these stocks entirely. They want them on their books by the end of the year when they do portfolio window dressing for the annual reports. So expect there to be the Santa Claus rally. Look, we've been good this year. We certainly deserve it. And the price of coal is way too expensive for Santa Claus. So again, not surprising we get a rally at the end of the year. Trade that appropriately, but manage your risk. 2022, all bets are off. But we'll be talking about that here soon. I'm Lance Roberts with 3 Minutes on Markets and Money. See you next time.